Hey, what is going on, everybody? To another episode of the Rapid Review. Appreciate everybody joining live. Chat is open as always. What's going on, Liz? Liz, good morning. Good morning. As you guys know, we'll do what we always do every single week. We'll break down everything that's going on in the overall market sectors, industry groups, stocks. Answer any questions or anything that you guys have. Get everybody ready to trade for next week. So, without further ado, it's time for the Rapid Review. All right. There you guys go. Disclaimer, you know the deal. Educational, informational purposes only, not financial investment or trading advice. All right. Let's break it down. What do we got going on? My market stance, I'm still sitting in sideways. I'll explain that a little bit when we get into the actual index charts. Exposure levels have dropped down through 20 to 40%. Though I'll let you know I am in all cash at this time. Webby trend, if you don't know what that is, go over to Mike Webster's YouTube channel, Webby 5150, and look for his 3-day trend. He breaks that down in depth. Looking at the S&P, we're in a choppy phase. Looking at the NASDAQ, we're in a downtrend. Looking at my 50-day trend, which references mostly the 50-day simple moving average, a little bit more of a longer-term macro trend. We're sideways in both the NASDAQ and the S&P. The S&P is 2.74% off all-time highs, and the NASDAQ is 8.14% off all-time highs, dipping even further off of those highs. It's been 80 days since we've had that rally day. You guys can see those are the follow-through days that triggered the prior uptrend that we just had. Looking at the indexes for the week, the leader for the week was the Dow, down just 0.38%. Then we had the S&P coming in down 0.61%. Then the Russell down 1.09%. And then finally the NASDAQ down 2.13%. NASDAQ and the Russell's closing range was horrendous. 6% closing range on the NASDAQ, 8.8% closing range on the Russell. The S&P closed in the 24% range, and the Dow closed in the 41.88% range. So Dow kind of in the mid range, but still in the bottom half. The Nasdaq and the Russell closing basically at lows for the week, and the S&P closing in that bottom quarter of the range. For the year, though, we're still green on all indexes. The Russell's leading out the year up 15.61%. Then we have the S&P up 6.96%. Then the Dow up 6.64%, and the Nasdaq laggard for the year down up 5.86%. All right. Let's go over. For some reason, I don't know why that feels wrong, that the Nasdaq's late lagging. I'm gonna have to double check that. We'll look at the charts. Moving averages. So we're right on the S&P. We're right on the Nasdaq. We were last week below 10, 21, 50, still above the 200. Dow below the 10 and the 21, still above the 50 and the 200. Russell broke below the 50 this week, just barely, and they're below the 10, the 21, the 50. So everything's still above the 200. Dow just holding above the 50, but other than that, below the 10, 21, and 50 on all indexes. Looking at distribution day count, still high count. We got 6 on the S&P. We got 8 on the NASDAQ. If we take a look at what went on during this week, the S&P lost the 723 distribution day. Added the 723 distribution. I was about to say, added 723 distribution day, which was Thursday, and the Nasdaq also added distribution day Thursday. And then we had no expiration on the S&P, and we had one expiration on the Nasdaq, which was the 6/16 Tuesday. We had that drop off due to time. So for the net, we gained 1 on the S&P. We were flat on the Nasdaq in terms of the overall count, leaving us 6 and 8, which is definitely a high count. You can see, especially on the NASDAQ, red on all those distribution days. We are below the close on every single one of those distribution days. For the NASDAQ, we are just above the Thursday distribution day that just occurred, and we are slightly above the June 24th distribution day that occurred. Going into next week, we'll see that 6/24 distribution day drop on the S&P, and we'll see the 6/23 and 6/24 distribution days drop on the NASDAQ. So should we not gain anything, We'll be looking at 5 on the S&P, and we'll be looking at 6 on the Nasdaq. Still, given the market action, a fairly high count. And if we look over at our distribution day calendar, you can see we're starting to again get some clustering that's been then building up. So that's why that count is still remaining high, despite that we've been in this choppy phase, and some of those days have fallen off. So keep that in mind. All right, we got IBD change to 0% invested finally. Okay, and I could definitely see that. I was a little more cautious just because, well, I'll talk about it a little bit on when we look at what's going on with the charts. And then QQQ shows 11.6%. Let me just see something real quick. Uh, All right. NASDAQ up 7.49%. I might have to check. Yeah, I was gonna say this number definitely looks off. I'm gonna have to check my dashboard and see how this was calculated and why that definitely looks off. So I apologize for that, where that number is coming from. I knew it felt off. So I appreciate that stretch. Because yeah, the QQQ's NASDAQ obviously not going to be the exact same, but that big a difference seemed wrong. All right, let's jump over and let's start taking a look at what's going on with the indexes. As always, we're going to start on the NASDAQ on the daily. Again, big prior uptrend. Actually, what we could do right here, get a more solid number. Yeah, see, oh wait, what am I doing? That's from March. January 1st. I do apologize about this, guys. Let's go from December. But I want to make sure I'm giving some accurate numbers. Yeah, 7.44. All right. So somewhere that my dashboard calculation is a little off. I'm going to check that, correct it, and make sure I get you guys the exact number this week. But, yeah, we're up, needless to say, on the NASDAQ. All right, let's get into what's going on. So we have the big prior uptrend, somewhat of a lockout rally. Follow through day, though, got us in and got us making some money as the market started to rally, giving us the opportunity. CANSLIM working perfectly through this time frame. And then we kind of got things to start getting a little sloppy and choppy towards the beginning of June. We had the big pullback into the 50, then we started chopping around, and this choppiness was kind of expected. When we started seeing the volatility increase and just everything that was going on. Things did start getting a little more promising as we started to see volatility contract. We got real tight. We were bouncing and holding right around those moving averages. And then where things really started to look kind of bad was a little bit of last week, but really kind of came into the end of last week where we dropped and broke below this tight range. Still, we were maintaining those higher highs and higher lows. If you look at kind of the bigger swing highs and swing lows, things were looking good. We were starting to kind of rally up. Then we met resistance at the declining 10 and the 21 and completely rejected. And Thursday is where the picture really started to change. Now, honestly, now that I'm looking at this, I'm so on the cusp of going to a 0% exposure for my indicator. I am all cash, keep that in mind, because we did close underneath these lows, but it was just so barely. So I am giving, because I know there's a lot of people, a lot of different styles, that leeway of saying 20 to 40%. If you happen to have something that's holding up well, maybe you're a longer term position trader, you might be looking to say, well, this hasn't broken down yet. I have a small core position in that. I could understand people having some slight exposure. So I'd probably say we're more of like a 0 to 20% exposure at levels on that. Now that I'm really looking at this, my apologies. I was at a concert last night, so I did Sublime concert. I didn't update my dashboard and fully do my full analysis coming into this. So we're kind of doing this a little bit live with you guys, and hopefully you appreciate me kind of going through my thought process as I'm doing this. But yeah, that was the big kind of expectation breaker. Something that Webby talks about a lot. Right, we were hoping to hold above these lows from June 26th and June 9th, and to see us dip below that. that's kind of like the big, all right, something we're not holding that level, right? We tested it on Thursday and then we just couldn't bounce off of that level. And if any, we just kind of rolled over even deeper and closing below all those lows. So really poor to see that. And that was kind of the signal that we've broken below this kind of choppy range, that we really want to kind of sit back on this market and give it some time to prove it wants to turn around at some point. But right now, all things pointing to a turnaround. I mean, sorry, to a downtrend to the downside. We got sloping down moving averages. We're taking out those lows. We broke this tight range. Things not looking good. Now, yes, the volume very light. Webby probably doesn't really want me to talk about this because he's not a volume guy. But volume has been very light since the end of June. Yeah, end of June. So beginning of July and end of June. Um, but yeah, needless to say, tons of distribution in here, breaking key levels, downtrending moving average below the 10, 21, and the 50. NASDAQ is looking not good at all. And looking like down is the trend that we want to go from here. Looking at the S&P not as bad. Again, still had that kind of break of that tightening action. We are still holding above those lows, but we're now below 50. Not a good sign to see that either. We'll look at the weeklies. When you look at the weekly, the S&P doesn't look as bad. When you look at the NASDAQ, now you see very clearly this, strong rally, choppy action. And if you look real closely, now we just kind of broke below those lows. So if this was a stock, you'd be like, all right, this needs some time. This needs some digestion. Even if this is the low, the likelihood is we're going to kind of move a little more sideways, not just completely rally off this area. So we will keep an eye on that. Dow looking, kind of fine, but this is kind of what happens a lot with the Dow, where even though now we're holding above the 50 and everything, that's not where a lot of us growth stock traders are operating within. And then we're looking at the Russell closing just below the 50-day simple moving average. But yeah, still not looking good either. All right, let's now jump back over to the dashboard. Let's start looking at what's going on within the sectors. Sector wise. All right, so looking at this week, we have energy leading out the week, and energy now back in that number one spot for the rankings. Then we have utilities coming in number 2 for the week, industrials coming in number 3, materials coming in number 4, and real estate coming in number 5 for the week. But when we're looking at what we have in terms of rankings: energy, technology, industrials, healthcare, real estate, financials. The financials and the healthcare groups were kind of looking probably the two strongest out of most of the growth stocks that we're looking at. Energy started to turn around. Let's actually just look at what's going on in the charts, because I think that paints a much better picture for everybody. So here we have my sector tracker over on Deepvue. If you guys don't know, I'm a Deepvue partner. This is a stock tool that I use for all my stock screening, chart and fundamental analysis. Huge fan of them because of how much versatility, how much innovation they're doing, and also the customization. So if you are interested in trying them out, link in the description. You get a free month. Give it a test. See if you like it. If you got questions, let me know. And then there's also a 12% off for an annual membership in there as well. All right. So if we're looking, starting off with energy was really poor, really poor. But now kind of gives that double bottom type of look to it. And I've been talking about this during the week. We got this kind of double bottoming pattern. Haven't really broke out of it yet. But we're seeing the strong climb up the right-hand side, clear strength coming into this group. And it is what was looking like, okay, maybe we're just getting like a kind of bounce, dead cat bounce. Maybe we'll roll over at the 50. We've now blown through the 50. We've got all those moving averages stacked in the right order, and we're coming up on the breakout from here. So definitely extended in the short term, but needless to say, energy now looking much better than it was when we were looking back going really to last week because it was able to hold above the 50. Utilities, utilities been very sloppy, choppy. Broke out from this range over here and then retested back into this kind of range. Looking at these highs right here, so nothing really to write home about. Industrials, though, industrials had this big base, kind of tightened up, broke out, trended above, squatted back in, and now is bouncing again. So industrials also looking good. And I think that's one of the groups that probably stands out amongst all these sectors. Materials, nothing really to write home about, though we did have a strong move above the 50, but we'll see if we can hold above that area. Real estate, real estate with a real nice low volume pullback, bounce right off the 21. Strong move on Friday. So real estate looking strong. Healthcare not hasn't broken down yet. We had a really, really strong uptrend, a lot of relative strength coming into this group. This is a group we had talked about extensively over the last, probably the last two, I'd say probably, where are we going back? Probably right around here. So probably over the last month, we've been talking about this group showing a lot of strength, specifically within the biotech space, which we'll talk about when we go into the sub industry groups. And yeah, it broke out, pulled back, found some support over at the 20, even though it tried to shake out below the 21 and is sitting right below all time high. So healthcare still looking okay. Nothing to say that this is falling apart. Tech looking very much obviously like the NASDAQ, tech looking very, very weak in a downtrend for sure, below the 50. Financials is very similar to healthcare, right? We've been talking about this. It broke out towards the end of June from this really tight range, rallied, looked really strong, pulled back into 21 and found support. So seeing good similar action to there, nothing that's canceling out what's going on with the financial sector right here. Consumer staples kind of in sideways trend. And then we get to communications, consumer discretionary, both looking extremely, extremely weak, well below the 200, well below the 50. Yeah, these just getting annihilated. And then we look at the 3 month rank right now. We could see right now we have financials and healthcare leading out, real estate in number three. If we go a little bit shorter term and we look at what's going on with the 1 month, we have energy, financials, healthcare, real estate. So possibly seeing that energy coming in. 12-month and 6 month energy still holding up. Um, so really right now, I think for most of us growth stock traders, we're really looking to sit back, not trade because of how the overall market is acting. But if there are groups that you are looking at, energy, financials, and healthcare, I think are the three top groups to be paying attention to, along with industrials, seeing how that kind of shapes up, even though it's number 5 and 6 across the board. Still a group that, when you look at the chart, doesn't look completely, doesn't look like something you should ignore. Yo, what's going on, Chad? As you guys know, chat is open. So if you have any questions, stocks, anything you want to look at, just please let me know. All right, let's now look at what's going on within our sub-industry groups as this loads. So one of the things to keep in mind is if we do start to really trend downwards and really go into more sustained downtrend, not just this just like slight break below this choppy action, we really want to pay attention to not just where rotation is going, right? Not just to those defensive names that we a lot of times see popping up, but out of the growth stock names that we trade, what is holding up the best? And when we look back to the beginning of the year and we had the downtrend, groups like memory, groups like a lot of these AI, even though the overall market was getting hit, even though they were getting hit as well in very many situations, they showed a ton of relative strength. And as the market turned around, that was where the focus wanted to be. So we're going to be doing the same thing. If we do, really, we should be doing the same thing always. But just when we get those downtrends, that's where CANSLIM works the best. That's where we are really seeing where the big institutional money is holding. And those groups are going to pop up and show some relative strength. So long term, we still see, memory up there, which is very interesting to see that as this has been holding up there for so long. And we'll talk about some of those names and we'll look at what's going on with those names in terms of their trend and how they're behaving. But you can kind of see the top 20 on the screen. What I've been looking at because of how much rotation things have been going on is really the short term. And we had been seeing cybersecurity, we have been seeing a lot of the biotechs and healthcare names looking very, very good, some software names as well. But now we're starting to see, and this is going to fluctuate much quicker. We're starting to see oil, gas climbing up those rankings. Some of these energy names, specifically in the oil and gas, climbing up those rankings, which is lending itself to confirm what we're seeing in terms of the energy group, even on a subgroup level. So it does look like there's a lot of money coming into the energy space. Cybersecurity now has fallen from the number one spot all the way to the 21 spots. We're seeing a lot of weakness in there. And even some of these healthcare names, like if we're looking, where's biotech fall now? Maybe I'm missing it. But a lot of these healthcare names starting to fall off. We're still seeing payment processing up there in the number 13, but that was a little higher too. So we're definitely seeing some rotation. I think at this kind of time in the market, our goal is really just to be observing and seeing what's going on, seeing where rotation is, seeing out of those growth names what's holding up the best, and knowing that this, if especially we continue in a downtrending kind of posture, this can all change week by week, day by day, but we want to just be on top of it and see what is looking like it could be the possible next leaders. Looking at the week, crypto miners, copper, semi memory actually showing some strength this week, and we'll look at all those charts, oil, gas in here as well, and then we're seeing a lot of these groups that got hit the worst this week. And rapid movers, just another quick look at things, right? We're seeing a lot of the oil and gas names in here, some of the industrial names, some of the material names also populating in there. And then the decelerating, space economy, LiDAR, quantum, energy storage, solar, healthcare. Like you can just see there's clearly a complete change in rotation in what's going on in terms of the leadership from a sub industry group. So we'll keep an eye on this. Again, more of an observation phase. I don't think anything's full confirmed as to where rotation is going just yet. Though it seems that we're looking at most of the stuff going into the oil and gas space and a lot of the other prior leaders getting hit pretty bad. Oil stocks looking good. All it takes is one tweet to nuke them or over or something. Yeah, absolutely. Look, it's one of the things that we understand when we operate, and this really honestly goes in just today's world. Um, Years and years ago, right, information traveled much, much slower. Something would happen and people weren't hearing about it until the next day sometimes, where now it's a tweet goes out, whether it be from Trump or whether it just be in general just information going out, and the market reacts to the minute. So it's always something to consider, and that's why we have our risk management rules. I don't operate or change much of my trading very much different than that. Um, just understanding that the volatility can be a little greater than it was prior to when I was trading. So not too much different. Just understanding that that can weigh in it. And I don't. One of the things is you don't want to get too caught up in the news, right? Um, when we got the follow through day, there were a lot of people that were like, well, here it's just a reaction from a tweet. But we saw the high volume classic follow through day action, and that tells us to follow our rules and to start testing the market. Doesn't always work, but it will get you into every single uptrend. And that's why risk management is key. So when you get those follow through days, try your best. I don't watch the news in general. I try not to pay attention to. I know some people it's difficult for them to do, but don't let what's going on in the news dictate what the charts are telling you. And that's why we have the follow through day and other rules. So if we get those follow through days, don't sit there and say, oh, this was a reaction from a tweet from Trump. I'm not going to be buying on this. If it's giving us the signal, you test the market and be prepared for both directions. It's just part of the game. Nobody's going to be able to predict. Because again, like you just said, we could have a tweet that says things are looking great for the market, and then we can have a tweet that turns around and says the opposite 2-3 days, a month later. Um, we're not trading off news. We're not trading off information. We're trading off what the big institutional money is doing. That's who we're trying to follow. That's who moves the market. That is data that we can actually interact off. Because sometimes it's not just the news. It's the market's reaction to the news. You can have really, really poor news and the market reacts positively to that, or you can have really, really great news and the market reacts negatively to that. And again, our goal is not the information. Our goal is what are the big institutions doing? What are the moves that they're making? Where is the money flowing? Because they move the market. And that is all that matters. I say this all the time. The market is just that. It is a market. All it is buying and selling of letters, essentially. And if there's more buyers than sellers, the price is going to go up. There's more sellers than buyers, the price is going to go down. And it's a supply and demand mechanic that's working. And that's how we trade. That's how CANSLIM works. And that's our process. So keep that in mind. All right. While we're here, we'll look quickly news-wise going into next week. We have a Fed meeting on Wednesday, so keep in mind that could bring some volatility into the market. One of those days that, sometimes it looks kind of lackluster in the morning, and then we get some sort of news coming out. We see a market reaction towards that. And then earnings, we are seeing earnings season starting to pick up. So that could be a catalyst, whether up or down in the market. We don't know. As that information comes out, as these names report, we'll see how it affects not only the name, but also the industry and also the overall market. So this is just taking a little bit to load, but just know that there's going to be a lot of names reporting next week, a lot of the bigger names reporting next week, and it is something to be conscious of. Though, like we've kind of talked about, I think most of us are sitting in cash. I think most of us are on the sidelines sitting and watching, but you still want to be in tune to what the market's doing, especially when a lot of these big names are reporting going into next week. All right, let's now jump over back to Deepvue. So I'll talk a little bit about what I did in my most recent trades. So start off with crowd. I gave this one a little bit of room because I had some cushion in this, right? You guys know that I had sold uh, right around, where's that last Wednesday? I had sold when we had kind of got rejected over here because I was heavily weighted. Um, I saw some rejection as we were getting to those all-time highs intraday. I trimmed some of the positions, and I was kind of left with my core position, giving it the room because I had the cushion, right? So I took some profits. It was about, I think, like a 15% profit here. And then I had this position down in here. And I said, all right, let me just give it some time and see how it works out. We got the first close below the 21 day. Um, but being that the market hadn't taken out lows, I was like, all right, let me just sit back and be a little patient and see if this is going to be like a shakeout below the 21. And then as we were clearly showing the resistance and that we wanted to close again, I then ended up closing out my full position with a gain on this one. So that's what led me to get out of crowd. The other names that we had was this. This I took a loss on this on Thursday. Ended up being like a 6.5% loss on a very, very small position. As not only did we break these lows of this area, but we just broke down on a risk level of hitting my stop on that. So closed that position out, and now we're below the 50. Ended up closing that day below the 50, and then ended up closing Friday holding below that 50. So that name crossed off the list. And then the last one, which I had, this I basically closed pretty much even on this name. I think I was up like 1.5% or something on this. Um, Again, just how the market was acting Thursday. Um, Decided to step aside on this one because things are starting to get wider, looser, and we were just in this kind of downtrending phase right here. So that's what led me to getting back into full cash. And I kind of talked about this when you look at when the market started getting choppy and we look at where the peak was from all-time highs. One of the things that helped me get through this time period was I greatly reduced my risk. A lot of my entries were very, very, very tight risk. I was focusing on the shorter term leaders. I was taking profits a little faster than maybe I would in a longer term uptrend. And throughout the choppiness and everything that went on from the all time highs and with the NASDAQ being down a good amount. I was able to walk away. I think it was like 3.5% in the green from June till now. So the big thing is if you were over trading, right? And we'll bring up the QQQs. If you were really over trading through this time period right here, um, it probably caused you death by a thousand cuts, and you probably hemorrhaged a decent amount of capital. And that's why through this whole time period, I've been saying, we really want to manage our risk. We really want to be very patient. We really want to be very disciplined and make sure that we're not over trading, because this is the time period that is one of the worst for us trend following stock traders. When there is no trend, when we are chopping sideways, when volatility is increasing, there are opportunities for some shorter term swing traders, right, to be buying these bounces and playing these little swings and taking some profits. And if that's your style, that's fine, play your style. But just understand that there's a huge difference between this really, really strong uptrends where it's in, as Mark Minervini would say, an easy dollar market, and things just everybody feels like a genius. And then in here, a lot of people, and this is where you get that boom bust trading, tend to keep trading the way they were trading in here, expecting the same results and causing them death by a thousand cuts and giving back a lot of the profit. So for myself, I'm very happy with how I handled this. I think, yeah, I could have probably squeezed a little bit more out of that this choppy phase had I been a little faster and taken maybe some more profits as names were hitting and getting towards resistant levels. And that's something that I'm going to have to work on in these time period frames and improve my swing trade style approach, where I'm selling a little bit more into those possible resistance areas or selling more right into the breakout, expecting somewhat of a retrace given what's going on in the overall market. Um, yeah, but the big thing, the big takeaway is understanding, especially for you newer traders, because that's where a lot of people tend to be that boom and bust, is there's a big difference and the market is strong and trending upwards and everything seems to be working and things get crazy, choppy and sloppy. And it's very difficult, right? Especially in today's day and age with social media where you see people buying names, you see people putting out their analysis of stuff, and you feel like you get that FOMO where you're like, oh, if I don't buy this name, and this might be the next big winner. And you really got to do your analysis, sit back and say, okay, what's the probability in this current market that this is going to be a big winner? And what's the probability that this is going to either chop me up or be a little bit more difficult? And I think the best way to handle this, if you are somebody who doesn't want to say, okay, once we started seeing this choppy action, especially towards here, you have trouble just sitting out, is just greatly reduce your position sizes, greatly reduce the risk you're taking so that if you are getting stopped out or you are taking, getting this choppy action, you're taking profits faster, you're selling a little quicker, and it's causing you to kind of just remain flat or maybe a little bit better than flat. But if you're trading the same way you are in here, this is where a lot of these profits get given back. So keep that in mind. I think that's the kind of uh, word or my wisdom I would like to depart for this week. All right, nobody, nothing. What do we got, chat? All right, Liz, you mentioned some names. We're gonna go through those real quick because I know a lot of people are talking about right. MU. Um, there was some clear relative strength in this name. Clear relative strength in this name, and there was a lot of people talking about the relative strength. The concern that I have is this again, wide, loose action, late stage run up that we're starting to get. Uh, could we have broke below the 50 and started building a new base? Absolutely. But I talked about this last week. There's a big difference between a pullback after we've seen like here, like these two pullbacks, and then where that pullback isn't a pullback and we start breaking levels that it had been respecting. And now we're starting to retest what was riding the 21. Now we're looking at the 50. And now the depth is starting to get a little more of like a base like depth as we get to 36. And then we start breaking below the 50. This isn't now, I don't look at this as a pullback. I look at this as possible base formation. And for me, I'm not looking to buy at the bottom of the base. I'm not looking to catch a falling knife. Um, Here, I'll do it because we're seeing the support and we're in a clear uptrend. But here, I know that the likelihood, the highest probability is that we're going to be forming a new base, not getting this bounce and reaction off of those areas. So I like to see things kind of tighten up, start to build the right hand side, start to make short term higher lows and higher highs, as we work up the right hand side, and then would be an opportunity I'd be willing to get into this. But when I see something like this, I'll let it work itself out. I don't need to buy at this area right here as we retook. I'll buy up here. I'll buy at the breakout if the market's environment starts to turn around. And that's why I kind of sat out on this one. We ended up having a pretty bad move on Friday, which was somewhat expected, right? Especially when you get names like this topping. Very often they're going to break the 50, they're going to try to retest, and then they're going to roll over again. And if you want to study this, how to make money in stocks or how to make money selling short, the CANSLIM book for short selling does a good job of breaking this down. And I think it gives people a very, very good perspective of the difference we're seeing from a pullback buy and from either a possible topping action or at the very least, just a base forming kind of action where we don't necessarily have to buy at the lows. We want to see the confirmation that this isn't a complete downtrend, that the market's turning around and this name is still in play. Let the other buyers do the work for you. 100%, right? Well, like we talked about before, we're following the coattails of the big institutions. And until I start to see some real confirmation that institutions are still going into this name and we have the right environment, which is a big piece, um, I'll sit back because even here, right? This was going back to March. People were talking about how strong MU was and trying to buy this breakout, even right here on this Monday, March 16th. And I had said I am fine with this name going on without me because the market environment was not good in mid March, and I knew the probability was the market was going to hold this one down. And this is part of the reason why I do top down analysis, I do bottom up analysis, but I put a lot of weight into the overall market when we're downtrending. And sure enough, it failed and it rolled over and it crushed itself. It was still showing relative strength. And then when the market did start to turn around, we this did give an opportunity to buy. I believe I bought on the 22nd right here with a tight stop somewhere around here. But again, the same thing we are talking about over here about worrying how the overall market is acting too is the same thing over here. That overall market, what the big institutions are doing, is going to weigh heavily on how most stocks tend to act. In the case of MU, would you wait for a long base period, then a break above the moving average, or would you want to get in at all-time highs? So, um, for if we do get a more consistent downtrend, I tend to want to buy breakouts earlier in the uptrend. Like if we look at SanDisk, you could see my buy was on a breakout. That was on the follow through day, right? And that is more of my style, because people could say it was this double bottom, fail breakout, and then re-breakout. You could say it broke out from just this overall sideways action, however you really want to look at it. So coming out of correction, I tend to buy more true CANSLIM style because that's when it works the absolute best. So going back to MU and your question, what am I kind of looking for? Well, I don't know where I sold this one now. I moved it, but yeah, I'm looking for more if this name is going to continue because this could be it. This could be rolling over. This could be a topping action. But if this name is going to continue and will still be in play in the next uptrend, whenever that may be, I'm probably going to be looking at things of more of a breakout buy. But who knows? I might get an early entry, right? There might be more of a handle, so it won't technically be breaking out to all-time highs. There might be some real sideways tight action that it gives me. As the market starts to follow through, that'll give me an entry. It's hard to say per se, but I guess the big thing is I'm not buying pullbacks. I'm not buying off of support on these names for the most part, unless it's extremely tight action and everything lines up with the market. For the most part, I'm looking at more of like a breakout style buy, whether that be a breakout in terms of a cup with handle, a base. Maybe somebody would say like a wedge pop or something along those lines, considering that like more of a breakout buy. So a lot of different ways to approach it. And it's hard for me to say because I don't know how the stock's going to behave and I don't know how the market's going to behave. Oh, there's a couple other names. Let's go look at Laser. right? Here's another name that people have been talking about, how great the relative strength has been, looking at the 1 month and just how it's been acting, got back above the 50. Again, to me, wide loose. Look, it is showing, right? It is starting to create what looks like higher highs and higher lows and look like it's starting to want to work its way up to the right hand side towards all-time highs. But I don't, in this type of market, I'm not looking to buy here. I want the market to be good. I want the environment to be good, and then I'll buy up here. I don't need to buy down here. That's fine with me. Because if this is going to go on a big run, it's going to break out to all-time highs, and then it's going to go on a run. So despite that it's showing a lot of relative strength, despite that it's reclaiming the 50, despite that it's making these higher highs and higher lows, probably looking like it wants to build that right-hand side of the base, it just draws my attention and it makes me say, okay, I want to pay attention to this name, but it doesn't necessarily mean that I'm willing to put risk in what's going on in this current market. So, um, again, just bringing up some of these names that I know a lot of people have been talking about. I haven't looked at AMD, right? AMD, look at how it's acting, right? Shook out below the 50. It's trading very, very tightly. It just broke below the 10 to 21. It's just 21% off in this little 17-day base that it's kind of forming. Just not the market environment that I want to start buying any, right? So there's a lot of, Eli Lilly looks strong, right? It's behaving very much like healthcare, but this is just not the market that I want to put risk in. I rather sit back and watch this take off without me. All right. I'm sure there's a lot of these oil and gas names. If we go over here, let's do this. I'm trying to think of some of the big popular oil and gas names that we can bring up. Let's look at, because this one was one that was constantly on my list, right? This is a solar name. That's different. Why is that in oil and gas? Shouldn't be in there. Let's see if I could use this new Deepvue feature. I want to try something. Stand by. Keyword. Is that how it works? No. There's a new feature that's coming. Actually, maybe it didn't drop yet, where you can actually just search a company description. I don't know where that is. Maybe earnings, sales, industry. No. Proprietary. No. I'll have to find out how to get to that. I was trying to bring up some of these oil and gas names. I'll do one more thing because sometimes they're in themes. Presets. Okay, I don't see a theme group for that. But, regardless, the market environment just isn't great. And because of that, even if things look good, I am sitting back. I am being patient. I am not looking to enter on some of these stocks, even if they look good, even if they look like AMD, right? And even if somebody could say, "Wow, look at that, the support this thing has," like I just know with how the overall market is acting, the probability of this stock continuing is going to be small. All right, CVX. Okay, there we go. Chevron, right? So here's your classic oil and gas name. Um, Kind of like a double bottom, sitting below this kind of 198.87 area. Again, well, in this one, will EPS do very, very shortly, but I don't need to trade every market. And I think that's the thing that a lot of people need to get into their head, right? So, and thank you for giving me a oil and gas ticker, because this is actually a really good one for us to talk about. So energy showing a lot of strength, right? A lot of money going into energy, even in the markets declining. The old saying, "Oh, there's a bear market somewhere," right? Maybe the bear market is in energy and oil and gas. I don't need to trade all the time. I don't need to be in every single market. And even if this breaks out and even if this goes on a run, yes, is it probably a smart move to be in a leading group while the market's downturning and oil and gas starts ripping like maybe it did um, in this time period right here? For some people, maybe that's part of your strategy. For me, I rather sit in cash. I rather be patient. I've done a little bit of the shorting thing. I haven't studied enough where I feel comfortable really, really operating within the short side of things. And it's something that I have to improve on my own strategy. But realizing that if we look at this market and most of us look at our performance, and let's zoom out, let's just, let's go on the weekly. Okay. 2025, right? If we start, and let's just say from basically 2025 in April, and you say I traded from the follow through day here, and then when we started getting choppy in here, and just say even in like the November time frame, I started sitting out. And I sat out this market and all this choppiness and all this chaos and did nothing for months, did nothing, made no buys. And then we got a follow through day and I traded. And then as this market started getting choppy again, I sat back and I did nothing. Right. Yeah, I'm not saying that you called the tops, but I'm saying as maybe as we like we talked about where we kind of rejected off of here and got that first resistance, now maybe you started sitting back and doing nothing. And now you sat back and you wait and look for a follow through day. If you did that, your performance is probably amazing, right? Because it was easy money here, it was easy money here, and then if you sat out here and did nothing, and if you did trade and you said, okay, what if I just didn't trade through these time periods? You'd probably see your performance being much, much better because the probability of your trades working in these choppy time frames is slim. And that's why M and CANSLIM is such a big deal. That's why we're paying so much attention to what's going on in here, and pay so much attention to the market environment, whether it's because you're looking at the indexes or maybe you're just looking at just overall market behavior, bottom up analysis on how stocks are behaving. So just keep in mind that sitting out is often better and that you can have insane returns just trading these strong uptrends. And the patience and understanding you don't have to be in every market is a trait and something that will help you be a much, much better performing and consistent trader. All right. So not surprised. Nobody really has any stocks to kind of bring up because of how things are acting. If we look at a lot of these names, look, the crowd looks healthy. Crowd looks strong. We looked at Lily already. Twilio breaking down. Oh wait, sorry. Liz, you had some names. Not invested. Okay, let's go through your names. I apologize. All right. Establishment Labs extended, right? Out, up, extended, in healthcare space, which looks good. Maybe something to watch, but right now, given the market, that's extended. We have eco, tankers breaking out. Again, overall market not looking good. If you decide you want to try to play into the possibility of like the oil and gas, I know this is industrials, but in the tanker, which I'm assuming they're playing into the I don't know why it's not showing up, but transportation of oil and stuff like that. And you want to play that, maybe take a couple small trades. I can understand it, just not my style. I'd rather sit out. Then we have NTAP, base forming, right? Very, very, very constructive. This is probably a name that you really want to watch because maybe this is forming the base and maybe this does what an MU or a SanDisk did, where it becomes the leader next market because of how strong the relative strength is in one of these information technology areas. And I think this is something to really, really watch. But I'm not looking to get in down here. I want the market to also look good because maybe it looks like MU, right? Maybe we break out and then we fail because of how the overall market is acting. Or maybe we break out and we keep going, right? That's fine because I can't sit and try to trade every single market. And when the probabilities are against me, I want to sit out. So this name I think is definitely worth putting on your watch list. I think this is a name that is looking very, very strong, but still, given what's going on in the overall market, I'm going to be sitting out. Next, we have Viking Holdings. Again, base forming. I like this. The relative strength. The RS line looking very, very good, looking very, very strong. So I would definitely say, and I'm actually going to put this on one of my watch lists. So thank you. Oops. But yeah, look, I'm not looking to buy. I'm just watching. I'm observing. And that's one of the skills, like you being able to observe but also not do anything and being able to sit out because how the overall market is acting is key. And then we got Dell, same thing, right? Dell looks real good. Dell looks real good. Look at that relative strength. Something I really want to watch. You know, maybe this is an MU that's going to base form when the market pressure can release, this thing goes off and is off to the races. And this is a name that I know a lot of us are watching. But again, just being patient and knowing the market environment. So this is kind of what I think most of us should be doing, is finding names like Dell, finding names like Snow, finding names like NTAP that are behaving well, that look good, that aren't acting like maybe MU is acting, where it looks like it wants to break below the 50, that aren't acting like Rocket Lab or SpaceX. Um, Names that are showing some clear relative strength, while everything else, HIMS is not. You know, while a lot of these other names are looking like this, right? Breaking down, closing below the 50, cutting up and breaking through certain, like, yeah, you know, like even this, like it's sloppy. It shook out below 200. Um, you know, Credo, look at this, like looking like it's seeing resistance at the 50. Like a lot of these names, Intel, Marvell, Lattice, right? Seeing a lot of how these names are behaving below the 50, breaking down, lower lows, lower highs, right? And then you're seeing names that are like what we just talked about, right? And then we're seeing, actually, I want to see what GEV looks like right now. Yeah, GEV doesn't look great either. Dell. But then we're seeing names like Dell. We're seeing names like Crowd. We're seeing names like Lilly, Viking, Snow, NTAP. The names that are holding up, all of these names are names that you do not want to forget about, like falling, breaking down, just collapsing. These are the names collapsing the ones that look, like I said, the Crowds, the Dells, the Snows, the NTAPs. These are the names that you want to start really hyper focusing on. Well, everything else in the market looks like crap. And these names are looking real constructive and really tight, which is something I love to see. Real uniform, tight action, not sloppy, choppy action. These are the names that start to become high on my watch lists. And if the market can turn around, these are the names that I'm probably going to be focusing on. And again, it comes from a top-down analysis, seeing the good market environment, seeing where the strength within some of these subgroups are, especially in the short term as the market starts to turn around. And if it's a longer correction, maybe in the longer term, and then seeing these names from a stock by stock basis that look to be, you know, acting completely different than what the rest of the market is doing. That's what brings you to finding a SanDisk. That what brings you to finding a Micron, and a lot of these other names that were really strong within the uptrend, right? Even a Sizzle. Sizzle looks beautiful, right? This giant year-long, you know, base pretty much. And then we got what could be a base on base kind of action, or you know, multi-time frame. Big 53-week base, big 73% correction. Again, people are going to say it's not a base. It's too deep. You know what I'm saying? Big consolidation, big correction, big strong rally, tons of relative strength right into the all-time highs. And then we got, when you look at them, the daily, we just hit that resistance, we're pulling back, and maybe we get a base that forms here. And now we're in a sustained uptrend. A breakout on the daily is a breakout to all-time highs across this giant base, that multi-time frame. Stuff like that is stuff that I'm paying attention to. And that's also why you want to be doing your work every single day, every single week, being in tune with the market, being in tune with stocks and how they're behaving, and being prepared, because when we do get a follow through day, again, for me, it was MU and SanDisk, names that everybody was talking about, right? Especially back here. When the market turned around and said, okay, now you're clear to buy, these names were breaking out, and these names were looking the most strong out of everything else in the market. And this is what leads you to buying some of these really strong names that make big moves. So NBIS looking rocky. Yeah, NBIS definitely looking rocky for sure. Right. But, like, look, we're seeing that similar action. Like, look at how many names have that similar action. Breaking below the 50, getting very, very choppy, seeing resistance at the 50. Some names looking better than other like MU, don't get me wrong. But a lot of these names, look at how similar the action is. I don't want to participate, or I'm not really too concerned about those names. Names like AMD, right? More interesting because it's behaving well. It's holding that uptrend. It's consolidating. It's holding key levels. It's looking much better. So this is kind of like the homework that we're doing every single week now. Finding these names, finding the AMDs, finding the crowds, finding the Snows, finding the Eli Lillies, the NTAPs, the Dells. Now, some of these names might collapse, right? Some of these names might collapse, but that's fine. Again, we're just observing, looking for those clear leaders, looking for what stands out. I always say, and this is a conversation that I had with Alex Marenko and Steve Sweats on their monthly meetup. We had talked about how very often there are names that become big leaders that when you look at them, they were screaming relative strength. They were screaming to pay attention to them because of the industry group, the fundamentals. They were checking all the boxes. And then on the follow through days or right around the follow through day, those names break out. Those are the names I want to be. There is thousands, right? Probably 3, 4, 5,000 names within the database of stocks that many of us are looking at, depending on what your baseline screening criteria could be, when you're looking at either price point or dollar volume, whatever it may be, market cap. It is very easy to find a name, right, like MU, and find a bull case for it, right? Painting your own kind of picture of what could happen. But there's a big difference between a stock like this. This is seeing some resistance at the 50, and you could probably put a case for both. And then looking at something like an NTAP, or looking at something like, and I keep saying these same names because these are names that are standing out, right? That's what we want. You want stuff that is screaming at you to pay attention to them, not stuff that you're kind of forcing a bullish picture on the chart. And that's one of the hard things to do. And we have talked about this in Discord before, how a lot of times when you're building these watch lists, it gets very difficult, right? Next thing you know, you turn around, you do your screening, you look through all these names, you got 100 names on a watch list, and you're like, oh my God, how do I get this narrowed down? How do I select these names? When you start being much more selective, you start getting where you're not so worried about missing, or that fear of missing out because oh, well, maybe this is the low. Oh, maybe this is, showing constructive action. When you really start having more of like, that's fine. This has maybe a couple things that look bullish about it, and there's a case for it could turn around and anything can happen. That's fine. You want something that is checking all the boxes. You want something that is screaming for you to pay attention because it's meeting so much of your criteria, and then the market's looking good. That is what you want. That is what you want. And it's not easy. It takes some time. And, I think a lot of us, more than many of us like to admit, have that fear of missing out. But I can promise, the better you get at controlling that fear of missing out emotion, the more selective you get, the more disciplined you get, the better your results are going to be. So keep all of this in mind, with what's going on in this current market. One more name that I didn't get to. Another tanker name. Yeah, this one not looking at as good, right? And here's a good example, all right? There's the Scorpio tankers, and then there's the ecos, right? What looks better to you? Eco, right? Eco showing much more relative strength. Now, and this is a pretty good example of what I'm talking about. Is there a bullish case for somebody saying we got a double bottom, we reclaimed the 50, we're trading tight, we're holding moving averages, right? This is showing some relative strength. We got good fundamentals. We're building up that right-hand side. Maybe we got a double bottom and they break out right at this range right here is what we're looking for. Maybe even let's just say somewhere around, say somewhere around there even. and you're willing to buy. Oh, all right. I could see a bullish case for that, right? Especially because if we're looking at this, maybe we draw a line over here, right? Okay, we break out here, we break out here. There's only this little upside resistance. We got a double bottom base. We got tight action here. We got good relative strength. We got good fundamentals, right? But now look at eco. See how much more constructive this looks. See how much better performing this looks. Eco is the screaming one at you that's saying this is strong. This is finding a bullish case for it. But then you could also do the opposite. And this is something sometimes I will do as well. Is I'll try to okay, I see a bullish case for it, but try to make a bearish case for it. Right? Maybe we're getting a head and shoulders on this one. Right? Maybe we have one shoulder, head, shoulder, and we're gonna roll over from here. Now we go to eco. A little harder to make that kind of head and shoulders pattern. A little harder to put a bearish case on this name. And that's a lot of what I'm trying to do, right? You look at MU, same thing, right? Is there a bullish case for this relative strength that we're showing that we took over the 50? Maybe we're building the bottom of the base, but also maybe we're got some sort of a head and shoulders type pattern that's kind of forming this. Um, so that's something that I think is another good tactic for you to do is, we often look at the market so much in the bullish. I'm looking for bullish buys in this market. Well, if it isn't screaming at you and you could find a case for both sides and you can almost just as equally build a bearish case for a stock, well, how really strong is that name, right? So we'll go back and we'll do the same thing, right? We're looking at snow. It's a little hard to maybe because we're just seeing resistance here, that could be your bearish case, but it's a little harder to put a bearish case, a little easier on snow on crowd. Like Dell, a little harder to put a bearish case on Dell. It's holding lows. It's got the shakeout. It's trading tight. It's right below all-time highs. NTAP, a little harder to put a bearish case on this type of name. So something to use as just a mental tactic when you're doing your screening as well. Whether it's saying, does this scream and check all the boxes? I know Steve Sweats, he's been doing this for a very, very long time. He has his 4 items that he has to check off. And I believe it's 3 he needs at least, but ideally likes 4 in order to be considered a buy. So you could have a checklist like that. There's that feel of something screaming at you. Oh my God, this is telling me I really, really need to pay attention to this name. And then you could also use the tactic of saying, all right, I clearly found a bullish case for this. Is there also a bearish case for this? And just keeping yourself in check and managing things. Because look, everybody says trading's, at the surface level seems very, very easy, right? There's a lot of little nuances and a lot of emotions and a lot of things that play into it. And understanding yourself, understanding your decision making will help you become a better trader. And I always say when you have that feeling of uneasiness, don't just ignore it. Try to make sense of it. Try to look at things and detach and give yourself a third party perspective. One of the other tactics I'll say about stock screening is if I'm looking at a name sometimes, I'll say, okay, if somebody else asked me about this, so I'm not thinking about this as my idea. I found it. Oh, wow, this looks great. And building a bullish case for myself. If I looked at this because somebody else came up to me and said, what do you think of this name? I am going to I'm going to be a little less biased to my initial view of bullishness, and I'll probably be a little bit more of a level head at looking at it. And that's another tactic that I will use sometimes to try to look at things again, detached from the market, detached from the stock, and looking at just the data that's in front of me. And then the final thing I'll say is, as we go on another one of my rants, is thinking about things in the sense of the probability of this working out. This is another conversation, and for those of you guys who don't know, I've been a couple months in a row now getting on Alex Marenko's meetup with Steve Sweats and him, and that's a presentation that I gave is stacking probabilities, right? The more and more things that you can stack in your favor, the higher and higher of a probability of a setup that you're buying based on the overall market, based on the sector, based on the industry group, based on the fundamentals, based on the chart, based on your risk management. The more and more things that you can stack that are good in that name, the more and more conviction I'm going to have. Um, and that's a conversation I'll have with myself too. Like, okay, well, maybe this looks really great, but it's not a well performing industry group, or the sector is not performing well. I gotta keep that in mind. That skews the odds in the wrong direction for me because I don't have that industry and sector strength. I don't have maybe the overall market strength. I don't have the fundamentals, or I don't have the perfect, clean, nice chart. Um, and again, this is where checklists, or even sometimes doing this mentally, checklist is going to be the easiest way to paint that picture of these names. Because at the end of the day, we're just nobody knows what's going to happen despite what people think. Even the best setups fail, even the worst setups take off. And we're just playing a game of probabilities and risk management based on how the market behaves, based on supply and demand, and using that to extract money when things are really good and protect our capital when things are not very good. That's a simplified version of it. So, all right. That's really all I got. Um, so to kind of finish it off, look, I'm in cash. A lot of us are in cash. IBD saying to be in cash. I would update probably my exposure levels to say maybe 0 to 20% for somebody that's a really position trader. But I think most of us are going to find us that we should be in cash. We really want to see this market at this point really give some follow through day type of action. And things right now are looking like more of either downtrending or at the very least choppy action. So being patient, um, managing our risk, continuing to screen, and continuing to really look at those outliers and the names that are sticking out like sore thumbs compared to what everything else in the market is doing, and being very, 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 very disciplined. Um, there will be a time when the market improves, and there will be a time to make money. But if you look at this year in general, if you only traded from April to June, those April, May, into the beginning of June, only those 2 months, you could have exceptional triple digit returns in just those 2 months if you did nothing else. So don't think to have outperformance, you need to be catching every stock, you need to be trading every market. It's actually the complete and utter opposite. When things are good, you want to press on the gas pedal. When things are getting shaky, you want to lighten up. And when things are not looking good, you want to just completely park the car and sit back and wait for things to clear up before you get back on the road. So hopefully that helps. All right. That's all I got. Again, comments. If you guys watch this whole thing, not just in the live chat, but I appreciate you guys in the chat making this all good. But if you guys watch this, especially the replay, throw a comment that you're watching this whole thing. These comments, it keeps me motivated to really spend some time and do these every single week because I see that it's helping people. The chats, you guys, the conversations we all have, the stuff that helps me kind of verbalize and mentally understand certain things that maybe are going on in my head that I'm not deep diving in. So I appreciate that. So as usual, like, subscribe if you're not subscribed. And if you have watched this whole entire thing, yeah, do me a favor, drop a comment on the actual saved YouTube video that's up on the channel, just with your feedback and tell me that you watch the whole thing. I'd really appreciate the support. So there's the YouTube, there's the X account, there's the link in the description for Discord, where I am constantly posting my weekly, my daily analysis, as well as communicating with a lot of people. And it's about over 1,000 of you guys that are really making the community what it is. So I appreciate that. Andrew, thank you. I appreciate it. Thank you for joining on the live.